Live from Bloomberg's World Headquarters in New York, I'm Scarlet Fu.
And I'm Joe Weisenthal. We're 30 minutes from the close of trading here in the U.S.
U.S. stocks extending their declines from yesterday as investors shy away from riskier assets.
The question is, what'd you miss?
Chaos on the Hill. Senate Democrats stalling the votes for Attorney General Republican Senator Jeff Sessions as Attorney General after the president fired the acting Attorney General for refusing to enforce his executive order. Plus, the bitter fight could also sour debate over Trump's nomination for the Supreme Court later tonight. That's a move that is sure to ignite more partisan brawl. And don't forget, the world's most valuable company, Apple, reports first quarter results after the bell. We'll be breaking down everything you need to know in The Numbers Don't Lie.
Now let's look at where the major averages stand as we head towards the close. Bloomberg's Abigail Doolittle is standing by.
Hi there, Joe. Well, stocks are sliding into the close for a second day in a row. In fact, the Dow right now is on pace for its worst two-day decline since October 11th. The Dow Transport's on pace for the worst two-day decline since the beginning of September. Earlier on the lows, the Dow Transports had actually been on pace for the worst two-day slide since the Brexit. So we're clearly looking at least a brief bearish streak here. The question is whether it will extend. It's important to look at other asset classes to answer that question, and it'll be interesting to watch what is ahead this week. As for one sector that's working today, though, the cybersecurity space, we have lots of green here, lots of these stocks trading sharply higher. Now, this is on the expectation that President Donald Trump would sign an executive order around cybersecurity. However, just moments ago, the White House actually said that that's on hold. Nonetheless, we have lots of strength here, and our team did speak to Mandeep Singh, a Bloomberg intelligence analyst earlier, who said that this should be positive for these companies if an executive order around cybersecurity comes through, that it would really instill data protection. It would also be around intellectual property, and that it's important considering that there have been several high-profile breaches, including Yahoo, Target, to name a few more. So this could suggest, without details, the rumors are that it could be very good for these companies in terms of companies having to add technology, and that would be good for the revenue lines of these companies, especially Palo Alto Networks, which is a broad platform company of next generation. But Mandeep Singh said that this could also be good for some of the IT consulting companies. In particular, he named IBM and Accenture. These stocks, though, are actually down. In fact, IBM is one of the big drags on the Dow today, but that was one idea that was outlined. And with seeing this red, it's interesting to ask what is ahead for technology. And we hop into the Bloomberg and we take a look at hashtag BTV 5576. This is, excuse me, actually, I don't know, Joe or Scarlett, if it's possible for you to pull up hashtag 5576.
5576. Hold on. It's coming, Abigail.
So the chart that we're going to take a look at is the S&P 500 information technology space. And this is a one-year chart. And we see that it is well above the 200-day moving average, or the orange dashed line, about 10% above that moving average. And we also see that the RSI recently hit 70. That's considered to be overbought territory. It's moving down. The last few times that has happened, at least one time, we did see a pullback to the 200-day moving average. The last time it happened, we saw some choppy consolidative trade. So it's going to be interesting to see whether or not we have that kind of trading ahead, choppy consolidative or some sort of a bearish streak. Lots of watching to do in the future as far as these sectors and the markets, of course, Joe and Scarlett.
Thanks, Abigail. What do you miss? Yet another busy day in Washington. Democrats sought to delay confirmations by skipping the scheduled votes on the picks for Treasury and Health Secretary. There was also a new push to block the Attorney General nominee, Jeff Sessions. Let's get to Kevin Cirilli, Bloomberg's chief Washington correspondent. He's on Capitol Hill. Kevin, thanks for joining us. So what's the next step? The Democrats employing a tactic to stall these nominations. Where does it go from here?
Well, I asked that to Senator Orrin Hatch, the Republican from Utah and chairman of the Senate Finance Committee, who was blindsided earlier today when all of the Democrats on the Senate Finance Committee boycotted the meeting in order to approve the nomination of Steven Mnuchin, President Trump's Treasury Secretary nominee. This, of course, has led to a procedural hurdle. It has stalled his nomination, and it comes, of course, on the heels, as Democrats have done this repeatedly now, facing claims of obstructionism from their Republican colleagues. I interviewed Senator Patrick Leahy earlier today, asked him to respond to the criticisms that they're being labeled obstructionists. Let's take a listen to what he had to say.
One senator says obstructionism or something to that effect, This is the same senator who single-handedly blocked something like 70 of President Clinton's judges. This is the same party that blocked dozens of President Obama's judges, including a Supreme Court justice. It doesn't pass the giggle test when they speak of obstructionism.
So a lot of finger pointing here on Capitol Hill, again, all in the back shadow of course, these executive orders coming from the White House, and just a few hours before President Trump is expected to announce his Supreme Court pick.
So basically, Senator Leahy is saying it's a bit disingenuous for Orrin Hatch to make that comment about the Democrats being obstructionists. I wonder, how united are the Democrats? Are there any cracks there in that foundation?
No, there are none. And the Democrats, while they are united, there is frustration amongst Republicans about the messaging strategy coming out of this White House. I can tell you that I've spoken with several top aides to several top lawmakers on the Republican side here on Capitol Hill, and they've expressed frustration, again, that there hasn't been a concerted effort coming from the White House on issues pertaining to, for example, these executive orders on the temporary travel ban, or even potentially the messaging surrounding the Supreme Court pick. Earlier today, we heard from White House Press Secretary Sean Spicer. He seems to be making the case that now they've gotten their act together, but increasingly concerns here amongst Republicans that the White House is utilizing too much political capital, and that could hurt issues like tax reform and even the Affordable Care Act, all political capital that Republicans will need heading into these next few weeks.
Kevin, how much is the unwillingness of Democrats to do anything to get these nominees over the line a function of the activism we're seeing on the left, people out in the street, out in marches, the party really being driven by the activist flank here?
I think that is a huge reason for why you're seeing a lot of the strategies and the tactics that are being deployed coming from Democrats. You know, I spoke with Senator Bob Casey in the hallway earlier, a Democrat from Pennsylvania, and what he essentially said was that this is being driven by the grassroots community. Now, there are other Democrats who are up for some tough re-election fights in 2018, most notably Senator Sherrod Brown, the Democrat from Ohio, who was the driving force, mind you, behind the Senate Finance Committee's boycott earlier today. And what he said is essentially that this is all coming from the bottom up. He pointed, of course, to the grassroots communities in Ohio, but clearly Democrats seeing that that's their strategy in being the minority party.
Thank you, Kevin Cirilli, Bloomberg's chief Washington correspondent.
Coming up, we'll hear from Antonio Garza, former U.S. ambassador to Mexico, now with White & Case. His thoughts on U.S. Mexico relations, the future of NAFTA, and investment in Mexico. This is Bloomberg. Apple set to report earnings after the U.S. closing bell today. And when it comes to Apple, of course, it is all about the iPhone. In its last fiscal year, Apple had its first annual sales decline since 2001 because of waning demand for its smartphone. So let's focus in on Apple, and today's The Numbers Don't Lie. As you can see here, Apple has posted 3 straight quarters of declining sales. That is expected to end this time around. Bloomberg estimates that there will be revenue growth of 2% in the first quarter. Analysts will be focused on iPhone unit sales, which have been declining compared to previous quarters. Estimates put that number at more than 76 million. And it is not just the unit sales that'll grab everyone's attention. The average selling price is a key number. That has been falling and is expected to be at about $688 for the first quarter, a bit of an uptick there. Now, all this, of course, plays into the idea that everyone's looking at how Apple's iPhone makes up the bulk of its revenue, 60% of its revenue. That's the orange slice of the pie. The iPhone numbers, of course, could get a boost later this year because Apple is set to unveil its 10th anniversary edition that some analysts are calling the Apple iPhone X. Outside of the iPhone, CEO Tim Cook has highlighted the company's services business, which is the white line, has been growing pretty steadily compared to the iPhone growth, which has, of course, spiked and then come back down. So certainly that's going to be a critical component of the outlook. And that search for any kind of growth in the face of stiff headwinds is growing more urgent. Any update on that issue will be of huge interest to investors, along with any commentary on tax issues related to the U.S. or the EU. We'll be following these earnings when they cross after the closing bell. We've got full coverage. Joe?
What do you miss? Since President Trump took office, he's made clear that he plans to follow through on campaign pledges, including finding a way to make Mexico pay for a border wall. Mexico is adamant that will not happen. Earlier today, Bloomberg Markets spoke with former U.S. Ambassador to Mexico, Antonio Garza, now with international law firm White & Case. He was asked where relations stand between the U.S. and Mexico.
Well, I think after a year of campaign rhetoric, much of it directed at Mexico and characterization of Mexicans as rapists and criminals, there was some hope that in the wake of the election there would be a calming period. Certainly there was going to be that uncertainty that would accompany any new administration, whether it be in Mexico or the United States. But I think last week it again peaked in a way. First, the sense that there would be a delegation of Mexicans going to the United States to start begin discussions of what NAFTA might look like going forward. And then the President Trump tweeting that the meeting should be canceled and Mexico didn't intend to pay for the wall. So tense. I think the call was probably helpful. But one of the things that you've seen is Mexico move from a level of anxiety about what might come next to frustration with the messages coming out of Washington, then to anger, and I think more resolve, more resolute in terms of going forward and how they will negotiate and what their expectations are dealing with the Trump administration.
Ambassador, there's been so much conversation here, especially among President Trump's supporters, about renegotiating NAFTA or revising NAFTA. Is there a similar conversation happening on the other side of the border? Are there people in Mexico who think that that deal needs to be reworked or rewritten?
Well, I think when you look at any agreement that has been in place for 22 years, given the dramatic changes in technology and the global marketplace, certainly there are areas that it could be improved. I think what the concerns are amongst people both in the United States and Mexico are that ripping up NAFTA, that kind of language suggests not a renegotiation aimed at making it a better, more efficient agreement, that can address the current marketplace, but simply moving towards a more protectionist, kind of isolationist view in the United States, and that is troubling. I think there's a sense in Mexico that if renegotiation was limited to those areas not needing legislative or congressional approval, for example, rules of origin, or trying to modernize it in much the way that TPP addressed certain aspects of trades, then that would be healthy. But certainly this notion of ripping it up and moving completely away from NAFTA is not something that is, I think, welcome here in Mexico and in the United States.
That was Antonio Garza, former U.S. ambassador to Mexico. Staying on the theme, anger south of the border continues to grow when it comes to NAFTA. Many outraged Mexicans say that Trump's pledge to rewrite the trade pact doesn't go far enough for them, and they say it should be scrapped entirely. For more on this, let's bring in Bloomberg's Isabella Cota in Mexico City. Isabella, thank you very much. You wrote a fascinating piece. You know, we sort of think about, most people in the U.S. think about this in a one-directional way, but as you point out, there are Mexicans who actually sort of feel similar and inclined to rip up the agreement with the U.S. as well.
That's right. We wanted to get the sense of how people in the street felt about NAFTA. We wanted to take it outside of the online conversation, which can be pretty one-sided at times. And what I found, in the streets of Mexico City at least, is that people are really fed up of the whole situation and actually would not mind if NAFTA was scrapped entirely. A lot of people actually mentioned to me investments that come from other countries. Mercedes-Benz from Germany, and we have Kia Motors and Toyota assembled cars here in Mexico, and that comes from Asia. So the sense is now that this could finally be an opportunity for Mexico to stop being so dependent on the United States and start anew.
That may be the case, but the reality is that Mexico depends so heavily on the U.S. If you come inside the Bloomberg here, this is ECTR Go, which tracks trade flows. And you can see in terms of total trade, the U.S., $500 billion worth of total trade in 2015. China, the next biggest partner for Mexico, Joe, $87 billion. So the U.S. is 5 times as important when it comes to total trade as China, the next biggest partner.
Isabella, oh, sorry, yeah, go on. Well, in terms of the math, it still seems very dicey to cut ties with the U.S. like that.
That's right. I mean, I was just going to point out that, in fact, yes, I mean, over 80% of Mexican services and goods go to the United States. I mean, we are basically intertwined like never before. So changing that would be very, very difficult. What I've been hearing from analysts is also that we need to get a sort of point-by-point mentions or changes in the negotiations that are going to happen, because the math is very dicey. We don't really know what this would look like, and it's very difficult to diversify your trade and your economy overnight. So this is the sense that we're getting from Mexicans. There's a lot of frustration, there's a lot of worry, but they're also very, very fed up of this.
Fed up, frustrated. They're fed up and frustrated with President Trump, certainly because of his anti-Mexico rhetoric. They're also fed up with their own president, President Peña Nieto. Who are they supporting? Is there someone who's kind of waiting in the wings, looking to jump in opportunistically here?
Well, this is very interesting. The whole trade and Twitter war between the two presidents is coming at a time when approval ratings for the president, Enrique Peña Nieto, are at their lowest. There was a hike in gasoline prices last month, which raised prices for about 20%. So that's made him highly unpopular, too. There is a candidate, which is always the same candidate here in Mexico, from the more leftist party, Andrés Manuel López Obrador. But so far, his reaction has not been very loud. Analysts do point to the possibility that he could possibly benefit from this. But as of today, we've not seen that. It's not been very palpable yet.
In general, though, the tone, even if no one has been able to consolidate the populace behind them, you give it, people you talk to in your article do sense that there's a more unified Mexico, even if there's no particular politician for that. What does that mean politically? Do you sense that there is this sort of rise in national pride in Mexico in response to the same thing happening over the border?
There is no doubt that there is a wave of nationalism that has come and swept Mexico in the last, I would say, since late last week. In fact, one of the people that I spoke to on the street showed me this ribbon and this pin that he was holding, which was saying, Mexico is united, please buy Mexican goods. There's not a very organized movement so far trying to boycott perhaps American products per se, but there is definitely this promotion by Mexicans and for Mexicans to choose Mexican products over products coming in from the United States. This is definitely a nationalistic moment that politicians across the country could profit from. It's yet to be seen who and how exactly that will be done, but this is definitely a moment of unity for Mexico and something that they could profit from easily.
All right, Bloomberg's Isabella Cota in Mexico City. Thank you so much. And Isabella's story can be found on Bloomberg.com. Coming up next, 10 years after the start of the financial crisis, have European economies reduced unemployment? We'll look at two key Eurozone countries. This is Bloomberg. Scarlet, what you missed, Under Armour's the worst performer in the S&P 500. The stock is falling the most since 2005, and this is after the company's sales forecast missed analyst estimates. 51 million shares changing hands. That is 10 times the three-month daily average. Tim Andriacci pointed this one out. The top line shows intraday volume here, and you can see it's continued to rise. The red dotted line is the projected volume by the end of the day, and the green line here at the bottom, that is your average in terms of how much volume you usually see in this stock on a daily basis. What's going on here? Well, certainly the disappointing forecast is part of it, but Under Armour is also the most shorted stock on the S&P 500. As of mid-January, more than a fifth of Under Armour's float was shorted. That is, people betting against the stock by borrowing shares to sell it in the hopes of buying it back later at a cheaper price. So the surge in volume could certainly be people selling the stock, but also perhaps covering their shorts because the stock plunged 28% at the open and has come off a little bit. It's now down 25%, paring its losses just a bit as the day continued.
For once, the shorts got it absolutely right.
Yeah.
All right, I'm looking at a problem for Mario Draghi and the ECB. We got employment data out of various Eurozone countries today. And let's look at the different directions that Italy and Germany are going in. This blue line is Italy. It's been trending up again. The unemployment rate, it's 11.99%. The unemployment rate averaged to 12%. On the other hand, this red line is the unemployment rate in Germany. It's down to 5.9%. That's the lowest level since the crisis. And then this down here is the spread between them, nearly 6% gap. And so, you know, you think Mario Draghi's challenge, he has to find an appropriate policy that's ideal for both Germany and Italy. And when they're going in two separate directions with two very different economies, that makes it really tough.
Absolutely. You talk about, you know, dividing Europe into North Europe and South Europe. This doesn't even bring in Greece, for instance.
No, which is much worse. I just think exactly.
All right. So even as the data overall for the Eurozone looks okay.
Pretty bad in Italy.
The devil's in the details. All right. The market close is next. Take a look at the major indexes. With less than 4 minutes to go before the close, the Dow extending its decline from yesterday, now losing 118 points. The S&P 500 off by 0.2%. The Nasdaq little changed at this hour. This is Bloomberg. We're moments away from the closing bell. What'd you miss? The Trump trade showing signs of fading still as the president's unconventional policy approach continues to unnerve investors in equity and currency markets. I'm Scarlet Fu.
And I'm Joe Weisenthal. If you're tuning in live on Twitter, we want to welcome you to our closing bell coverage every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. U.S. stocks, represented by the S&P 500, falling for a fourth straight day. That is the longest losing streak since before the election, November 4th. The NASDAQ actually closing now in the green, but at the end of the day, it's little changed. And, of course, we did have some data today, ECI, Employment Cost Index, and Chicago Fed, both a little bit weaker than expected.
Yeah, not that great, but we were down way lower than this earlier in the day. And kind of like yesterday, coming well off the lows. So still, the market's hanging in there.
Of course, we did follow Europe lower as well. The VIX moving higher for a second day, too. Still near a 2.5-year low, but still moving up a little bit. I want to look at industrials. It is the worst performing sector in the S&P 500, down more than 2% in the past 3 days. UPS, you can see they're down by 7%, worst one-day drop since January of 2015. A stronger dollar, as well as a shift to more consumer deliveries, weighed on its outlook. And, of course, United Airlines, along with some of the other carriers, are still seeing some weakness following that travel ban. In terms of other movers, ExxonMobil trading at the lowest since early November after taking a $2 billion write-down on some gas fields. Nucor, that is the steel company, earnings beat analyst estimates, but accounting changes for certain inventories to FIFO, first in, first out, had an impact there. And Teva, you could see they're down 3%. It lost 4 patents on its top-selling multiple sclerosis drug.
Now to the bond market. Let's start with U.S. bond yields down today. So kind of interesting because equity markets mostly erased their losses, but 10-year yields on U.S. government bonds did tick lower. We got some mediocre data that came in a little weaker than expected. You mentioned the employment cost index. But check out Greece. 2-year yields continue to surge. At one point, Greece was over 9% yields. It pulled back a little bit. You can see the big spike there. So you can also see over this 1-year chart, it has been higher as recently as the summer. Short-term yields were over 11%. But keep an eye on that. Still these outstanding issues of whether to unlock more bailout money for Greece.
As usual, it comes down to rate of change. In currencies, the Trump administration is back at it, talking down the dollar, this time by criticizing Japan and Germany for having currencies that are too weak, which is basically another way of saying that the dollar is too strong. You can see for the Bloomberg Dollar Index, we've almost made a complete round trip. It had surged as much as 6.5% after the election, but it's now back to the weakest or the lowest since November 11th. Peter Navarro, who heads up Trump's National Trade Council, also called the euro grossly undervalued. So if you look at the euro pairs, euro dollar, euro yen, you can see the impact there as well. Although, look at that, the euro stronger there by 0.9%. Of course, that would be the reaction there after Navarro called the euro grossly undervalued. But he can't really do much more than that, jawbone.
No, and right. It seems very unlikely they would do anything like label Europe a currency manipulator or
Doubtful.
anything like that. All right, let's look at commodities. Green across the board. Industrial metals like copper, that had a good day. Other industrials, too. Silver rallying 2.5%. And gold having a nice day. There was this amazing headline on the Bloomberg earlier that was basically, it said, gold rallies after Trump shocks the market by doing exactly what he said he was going to do. So markets are surprised that there's all sorts of, these political moves, but it's exactly what he said he's going to do, and people went into gold.
Well, investors were taking this idea that you should take Donald Trump not literally, but seriously, but and instead it would appear that a lot of he's following through literally on a lot of his policies.
And what does that even mean, take him seriously?
All right, those are today's market minutes.
And don't forget, Apple, the world's most valuable company and maker of the iPhones, will report first quarter earnings in half an hour. We'll bring you all the headlines with our lineup of expert analysts from Bloomberg Intelligence and Bloomberg Technology.
In the meantime, we want to take a deep dive into the Bloomberg. You can find our charts using the function at the bottom of this screen. I'm looking at Indian IT companies. They plunged in overseas trading. The group now below the short-term trend line, which is the pink 50-day moving average. We know the Trump administration plans to overhaul the H-1B visa, work visa program, possibly through an executive order, but someone in the House has already introduced a bill to tighten requirements on this program. Indian IT companies are huge users of this visa. They send their employees to work in the U.S. at cheaper rates to displace higher cost U.S. workers. Trump wants to double the minimum wage for these workers. That means less business potentially for these Indian outsourcing companies. And let's face it, they depend on the U.S. for 60% of their business. So this could result in a huge margin hit. I mean, the Indian media, their headlines are all on this.
Every day, another sector of the market taking a dive on something Trump-related. I want to go into the Bloomberg to look at all the different ways to measure wages. Actually, there are more than this, but it's important. If you look at this chart, the blue line is the Atlanta Fed's monthly wage growth tracker. The yellow line is the average hourly index, which we'll get an update Friday when we get the jobs report. And the white line is the employment cost index, which we got today. It's a quarterly measure. It ticked lower. And so, they're generally trending up, but they're not all the same. And it's important to reminder that no one data point can ever give you the answer. They're full of noise, sample bias, whatever. So you want to look at the broad trend to see what's confirming what. So it'll be interesting to see whether average hourly earnings that come out on Friday continue to show strength or whether they start to soften as well.
And this is hard data, so this is backwards looking.
Right.
But are any of these particular metrics more reliable or more coincident than the other?
It's a really good question. I mean, people like the ECI because it includes benefits. People like Atlanta Fed because it tries to adjust for demographics. So I think that each have their probably strengths and weaknesses. What do you miss? It is a busy week for central banks. Today, the BOJ kept its interest rate and asset purchases unchanged as expected. Tomorrow, we'll hear from Janet Yellen as the FOMC is holding its first meeting of the year. And Thursday, the Bank of England releases its rate decision. I want to bring in Takatoshi Ito, Columbia School of International and Public Affairs professor, who focus on international finance, the Japanese economy, and monetary policy. He also served as a member of Prime Minister Abe's Council on Economic and Fiscal Policy. Thank you very much for joining us. There's a lot of excitement right now that central banks can begin a handoff process, that all these years developed economies have been focused on so much on easy monetary policy with no help from the fiscal side. Maybe now we're going to get some stimulus, some inflation, they can ease back. Do you see that as correct, or do you see the world's central banks still generally staying very close to zero by varying degrees?
I think the most of the central banks are still very close to zero, except the United States, which they try to hike the interest rate maybe 3 times this year. There's a discrepancy between the U.S. monetary policy, which is on the process of normalization, and BOJ, BOE, and the ECB still at the zero and QE.
Right, but we're not there quite yet at normalization, right? I mean, still difficult to push over the process of. Central banks clearly are no longer the only game in town. Right. Government policy starting to take over. Central banks are now in wait-and-see mode as they wait for the different administrations to enact policy. What's the cost of having passive central banks, wait-and-see central banks in this kind of environment, this turbulence?
Well, I think the central bank is watching very closely what's next in the Trump administration. And fiscal stimulus, tax cut, that's okay. That's, central bank can handle it. And probably that means higher inflation rates so that they can hike the interest rate faster, and achieving a 2% inflation rate faster. So that is possible and welcome by the central bank in the U.S. and also Japan, because for Japan that means U.S. dollar will appreciate, and that's good for Japanese and probably for the European countries.
In theory, if we got some sort of fiscal stimulus and tax cuts, the bank could model it, try to figure out the growth and inflation impact, and then, do rates in accordance with that. But part of the issue right now is that it's very hard to understand the signals, or people are scratching their head, what's really going to come? How does a central banker deal with the fact that fiscal policy does seem to be extraordinarily uncertain?
The risk is that fiscal policy does more than it is needed, then inflation rate going up faster than normalization process, then central bank has to respond, hiking the interest rate faster that will be very disruptive and may cause the stopping the recovery process.
Do you think the U.S. is at risk of that?
Well, because we don't know how much is coming.
But we are near full employment. Inflation is near the 2% target.
Yeah.
And we're talking about perhaps $1 trillion in infrastructure investments.
Yeah. So infrastructure investment, we don't know how much is coming and whether Congress will approve it. So there's a lot of risk, uncertainties there. And I think the central banks are watching it very carefully.
Let's talk about Japan. The Bank of Japan overnight didn't do anything, didn't change anything. Is the Bank of Japan achieving its goals? How well is the current monetary policy stance working in your view?
Well, the real side of the economy is doing well. Growth rate is above 1%, which is good for the Japan, which is suffering from the aging. And unemployment rate is down to 3%, which is lowest since the bubble years. And inflation rate, although it's very low, but has some uptick. And I think Bank of Japan is comfortably waiting that this recovery process will continue.
What's the likelihood that Shinzo Abe will ask Kuroda-san to stay on as head of the BOJ after his term ends?
Well, it's too early to speculate. I think Kuroda-san is doing well, and there is a chance that Abe-san will ask him to stay on.
Your name has come up as a possible future head of the Bank of Japan. Is that a position you would be willing to take?
Well, I do not answer the hypothetical question.
I had to try.
Well, I have to see,
Well, if Shinzo Abe were to ask you to advise him now, or hypothetically, if we were to ask you to advise Shinzo Abe now on how to deal with an unpredictable U.S. president that has no qualms about calling out different countries for keeping their currencies weak, how would you advise him? What would you say?
So the biggest risk is, as you mentioned, the currency intervention, overall intervention by President Trump. And I think you have to deal with it and try to talk to President Trump with reasoning, and that's why Mr. Abe is flying to Washington soon.
In general, how much are you worried about a rise in policies where everybody is trying to weaken their currencies and where more leaders take a perhaps zero-sum view of world trade?
Right. So I think the best defense that Japan can take from, against countering those oral intervention from the Washington is that Japan has not intervened in the market. So it's a monetary policy which responds to this very low inflation rate, trying to go up to 2%, and that should be allowed. So that's the best defense of the Japan.
All right.
Takatoshi Ito, Columbia School of International and Public Affairs professor, thank you for your time.
Thank you.
Bloomberg will have special coverage of the Fed's first monetary policy meeting of the year. It began today, but the decision comes out tomorrow at 2 p.m. That is 2 p.m. New York time on Bloomberg. you missed, tonight at around 8 p.m. Eastern Time, President Trump will announce who he'll nominate to fill the vacancy on the Supreme Court that was left by Justice Antonin Scalia last year. Joining us now is Bloomberg's Greg Stohr, our Supreme Court reporter in Washington. And Greg, what's interesting here is that the two finalists were summoned to Washington ahead of this primetime announcement, which raises the prospect that he'll do some kind of reality TV-style reveal. Is this really what people are saying? What can you tell us about that?
It's certainly what people are talking about. I am not aware of any time comparable to this where a president has asked the two finalists, or summoned them, as you said, to D.C. The president is clearly trying to create some buzz, some questions about what he will do. We're just going to have to wait and see. I am told it is one of these two people, but we do not have a firm indication of which one it is.
Greg, do you believe that the one who is going to be selected is aware, or are they both still in the dark, as far as you know?
It's not 100% clear. There are some indications that at least one camp believes that their person is going to be the nominee, but it's not clear enough that I can really go much farther than that.
What's the strategy on the Democrat side? They, of course, are boycotting the nomination votes for various cabinet secretaries. How hard are they going to rally together to oppose these nominations?
Yeah, that remains unclear as well. That's because the Democrats are really holding their cards close to their vest right now. Today, Chuck Schumer was asked, he's been using the phrase out of the mainstream, saying Democrats will oppose somebody who's out of the mainstream. He was asked specifically today whether Hardeman and Gorsuch were out of the mainstream, and he didn't answer. They're waiting to see how this plays out, just like the rest of us.
Does the base of the Republican Party have a preference among these two?
Not between those two, no. Everybody I've talked to, or I should say at least the bulk of the people I talk to, are very happy with anybody on Donald Trump's short list, and that includes Bill Pryor, who's another federal appeals court judge who is on the short list but is not in the list of two finalists, and Ray Kethledge, a fourth appeals court judge. They're all going to be conservative. They're all going to be pretty similar to Antonin Scalia, and you can expect conservative groups and Republicans to come out very strongly in favor of this nominee, no matter who it is.
So moving ahead then, whichever candidate it is going to be, what kind of questions might we anticipate at the confirmation hearing?
Well, you can certainly expect the usual questions you expect at a confirmation hearings. You know, people are going to want to know, what a nominee thinks of Roe v. Wade, the abortion rights ruling, Obergefell, the gay marriage ruling. But what happened over the weekend with the Donald Trump's travel ban has certainly raised some new questions, and that almost certainly will play into the hearing to some degree. Democrats and perhaps some Republicans are going to want to know whether the nominee is somebody who will stand up if it turns out Donald Trump does something clearly unconstitutional. Members of the Senate are going to want to know that a justice won't be afraid to say that to the man who nominated him.
Obviously, this seat was vacant for almost a year. Barack Obama nominated Merrick Garland for it. Republicans didn't even give Garland a hearing. There's going to be a lot of pressure on the Democrats to essentially try to block this at all costs, filibuster whoever the nominee is. How are the politics looking forward? Are Republicans, is the White House confident that it'll be able to defeat a filibuster?
The White House is confident, and Mitch McConnell, the Senate Majority Leader, a Republican, is also confident, too. Now, he isn't saying whether Republicans will resort to what's called the nuclear option, which would effectively kill the filibuster for a Supreme Court nomination and mean that you only need a simple majority vote. You're absolutely right. Democrats are feeling the pressure from those liberal interest groups. There are certainly some Democrats who are still very, very angry about the way the Merrick Garland nomination was treated by the Senate and the Senate Republicans. That said, everybody is playing a long game here. This may not be Donald Trump's last Supreme Court nominee. And one question for Democrats is going to be, are you going to filibuster now, or are you going to wait until there's another opening that might actually swing the court in the future?
All right, Greg Stohr, Bloomberg Supreme Court reporter, and we'll be covering the president's announcement live at 8 p.m. Eastern here on Bloomberg TV. Coming up, Apple's first quarter earnings release is expected in less than 10 minutes. We'll look at some of the key data on the company. This is Bloomberg. It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. Roche Holdings is considering options for its diabetes care business, including a sale. According to people familiar with the matter, some alternatives being weighed also include a partial sale of the business or even a spin-off. A sale could fetch as much as $5 billion, though the valuation could be affected by pricing pressure in the industry. Ray Dalio, who runs Bridgewater Associates, the world's largest hedge fund, said he's becoming more concerned about the damaging effects of President Donald Trump's populist policies. In his note to clients today, Dalio said the president's populism may overwhelm the benefits of his pro-business agenda. Major oil companies are still struggling through the deepest market slump in a generation. ExxonMobil posted its biggest profit miss in a decade, and it took a $2 billion write-down on gas fields in the Rocky Mountains. For Exxon, it was the 9th straight quarter that earnings have declined. Frankfurt and Dublin could capitalize off Brexit at expense of the UK. Some banks are said to be planning new hubs in the EU as they scramble to secure continued access to the bloc. Standard Chartered and Barclays are considering Ireland's capital city as their EU base, while Goldman Sachs and Citigroup and Lloyds are eyeing Frankfurt. That's according to people with knowledge of their contingency plans. A UK lobby group says as many as 35,000 jobs could be relocated out of the UK. And that's your Bloomberg Business Flash.
Apple's set to report fiscal first quarter results in about 5 minutes. So we want to take a deep dive now into the Bloomberg. You can find our charts using the function at the bottom of the screen as we get you ready for Apple's results. So let's start with Apple's different revenue streams. Of course, at the end of the day, Apple is really just a phone company in that it depends on the iPhone for about 60% of its revenue. CEO Tim Cook recognizes the need to build up other businesses. So we're looking at services here, which is the white line. Pretty steady. It looks almost boring in comparison to iPhone revenue growth, but actually it's now growing at a pretty steady clip of 25%. The orange line, of course, is the iPhone, and the swings are because you've got different iterations of the phone. Beyond 2017, Apple's prospects really probably hinge on a bigger push into content, into apps, into new services. Existing services like iTunes, Apple Pay, iCloud haven't really gotten the company where it needs to be. And, of course, that's what everyone's looking for, some innovation on the services side, in addition to the next great iPhone.
Absolutely. And of course, Apple is, I believe they've expressed frustration at the fact that they don't get credit for their services business like other companies do, and that those services often command a high multiple. So it'll be pretty interesting to see the extent to which that's really flowing to the bottom line with
that
respect
recurring
to
revenue growth. Everyone loves it.
You got to love it. All right, let's just talk about Apple, the stock, for a second, and look at how the company has done in previous earnings. I'm looking at the ERN function on the terminal, and if we come over here, and I'll highlight this number, 4.78%. That is what it usually has done in recent earnings, one way or another after earnings. So whether up or down, it's an absolute value. Often the stock moves about 4.8% after earnings, but you can see it's not consistent. Recent ones, 2.25 was last time it dropped. The time before it gained 6.5%. The time before it lost 6.2%. So you can see this one likes to swing around. There's no particularly consistent pattern after earnings in terms of whether it gains or whether it moves. But the pattern is that it moves almost 5% typically. So
what's
we can
interesting,
expect some
of
nice
course,
swing.
as well, is the percent surprise column, which, as you can see, all green there, except for the fiscal second quarter of 2016, where you saw a drop of almost 5%. Apple always lowballs when it comes to its forecasts, and then it beats it. It's easy to beat it when you give a really conservative number.
Absolutely. And so one thing you almost always expect out of Apple is some sort of beat.
Coming up next, Apple is set to report fiscal first quarter results. We will bring you the numbers when they cross. And, of course, this is the world's most valuable company. The supply chain is enormous, so it's got repercussions for our companies in Asia and Europe. From New York, this is Bloomberg. Okay, we are waiting. Apple's earnings due out any minute. They have just crossed. The world's most valuable company reporting revenue. Let's start with its outlook for second quarter revenue, because that's what everyone looks at. $51.5 billion to $53.5 billion. The consensus estimate is $53.8 billion. So true to form, Apple lowballing its outlook. As for the quarter that ended, $3.36 was the first quarter EPS. Analysts were looking for $3.22 on a GAAP basis. First quarter revenue, $78.4 billion, higher than what analysts analysts had expected. 77.3 billion was what was anticipated. So the 78.4 is certainly an increase from the same time a year ago. Once again, 336 is your earnings per share number for the first quarter. You could see the stock there in the after-hours session. So far, up 2.7%. But the forecast, Joe, the revenue forecast is what we're looking at here: $51.5 billion to $53.5 billion, missing the consensus estimate.
Yeah, so far the number looks pretty good. Stock now up 2.5% in after hours. All the data looks solid. You see Q1 revenue $78.4 billion versus estimates of $77.3 billion. The iPhone units sold, always key, 78.3 versus 76.3, and the average selling price also beating estimates at $694.57 versus estimates of $688. Finally, on that service revenue, Luca Maestri, the CFO, saying they expect it to double in the next 4 years. So a lot of interest in how fast they're growing these other parts of the business.
All right, let's get some instant analysis here on Apple's results. We've got Techonomy founder and CEO David Kirkpatrick and Bloomberg Intelligence senior analyst John Butler. John, as we're giving the numbers, you were checking your Bloomberg as well. First blush, do the fiscal first quarter numbers on Apple iPhone, whether it's unit sales or average selling price, matter when we're all concerned about the outlook and the next generation of the iPhone?
I think it, first of all, at first blush, I thought it was a pretty good quarter on the surface. It looks good. The iPhone units look pretty good to me. You know, what they were really hoping for is they're coming off at 3 quarters of negative iPhone growth. And at, I'm going to check my notes here, 78.3 million unit shipments. That should be a positive number year on year, and I think that was an important milestone for them.
Yeah, it was 75 million the same time last year.
Yeah, because if there was a concern coming into the quarter, I think a lot of people were really sweating some of the reports that the iPhone 7 wasn't selling well. Obviously not true with these numbers.
We have this quote from Tim Cook. He says, "We're thrilled to report that our holiday quarter results generated Apple's highest quarterly revenue ever, broke multiple records along the way. We sold more iPhones than ever, lots of selling more than ever." David Kirkpatrick, what do you think?
Well, you know, the iPhone 7, it's a very cool device. On the terms that they established 10 years ago, they're performing very well, and I think they have continued runway to continue milking an old product concept. The question I have about Apple, if you're a longer-term thinker, is where do they go with new products, with new ideas, and why haven't we seen them coming up with essentially any that really matter?
Is that holding back sales of Apple products, whether it's the iPhone, the iPad, or the Apple Watch?
Probably not. I mean, you could say it's holding back sales of the Apple Watch because the Apple Watch isn't the product that should have been that. But I think the real question is how come Amazon came up with the Echo and Apple didn't? That's the key question.
Speaking of these other products, you should, by the way, if you have a Bloomberg, check out T Live. Mark Gurman on the T Live blog points out that the other products category, which includes the Apple Watch, AirPods, Beats, set-top box, actually declined 8% year over year. John, what is the issue there in your view? Why have they let Amazon seem to take the early lead in this connected home category? Why can't they connect on another product?
Well, I think the biggest issue is where's the vision? You know, we brought that up just a moment ago, which is they're in a classic product transition. Their core product really is maturing rapidly, and there's nothing to pick up the slack. We were just talking about it with the down year-on-year growth and other revenue. And so, you know, I'm not sure the answer lies in hardware. You know, I think they need to look at content. They need to look at other services beyond just Apple Pay, for example. And so, you know, you need someone there who really needs to begin to think out of the box, because that really is the issue right now, is that product transition.
We're also looking at the breakdown geographically. Apple reporting that 64% of revenues for the quarter came from outside the U.S. There was 20% year-over-year growth in Japan, 9% growth in the U.S., a 12% drop in Greater China. That is a critical market for Apple, and it's dropped the ball here. Do people in China, do consumers in China, do they care about the other services, the other products, or are they only looking at the iPhone and thinking, you know what, I'm not getting what I'm promised?
Well, you know, I think they're probably limited to some degree in the ability to deliver the services in China compared to other geographies, given the control that the government exercises over digital businesses. But I would definitely agree with John that, you know, What's interesting about the Amazon Echo Alexa is it really isn't even a hardware device. It's really a set of services and a platform which is a front end for a deep back-end AI cloud service. So Apple hasn't really made that transition the way they should have. Yes, they have a lot of cloud services in pieces that they're delivering through their various products, but they don't have the kind of visionary execution that we're seeing at Amazon. And I would have to say it's disappointing that, you know, Johnny Ive didn't really carry the ball after Steve Jobs died, which is what I think people expected that he might be able to do.
Right. One of the knocks on Apple, and of course it's an incredible success story, so there aren't that many, but that they've never really been like an internet company. They've never really been a digital platform company. Amazing hardware devices, but never that online service the way Google, Facebook, Amazon have really mastered that domain.
And a big piece of that is they've never understood social. I mean, a few times they've tried to do social, it hasn't done very well, or they've often abandoned it. They're getting a slightly bit better now, but really none of their products are intrinsically that social. They're communications products, but there's nothing like Snapchat or Facebook or even Twitter inside the Apple product set. So that is serious. On the other hand, nobody's ever executed better than them. Tim Cook is the greatest logistics person business has ever seen, and you can't take that away from them, and they still have the world's most sexy tech product. It's just a little long in the tooth.
Where's the leadership on innovation and vision, I should say, at Apple, John? I mean, Johnny Ives, who David mentioned, should be the guy who carries the ball over the goal line, but it's not happening. Is there a groundswell of maybe concern that Tim Cook is not the person you want in this phase of Apple's growth?
You know, if you look at what they're doing, I think it raises a lot of questions. You know, AI is just one area, as we talked about, where they're left lacking a bit. But really, again, they're at a point where I think what's really needed is vision, and they're a very secretive company. So we're sort of led to believe that the brains behind the AI work at Apple is buried in a skunk's work. But I'm not so sure on that. I mean, we're not really seeing the fruits of their labor so far, that's for sure. So
the average selling price of the iPhone beat perhaps is an indication that they're selling more of the iPhone 7 Plus. I randomly came across like a 7-year-old iPhone the other day, and it seemed like this tiny toy compared to my 6 Plus. Are we all going to get Pluses, and then will they then have to come out with an even larger one when the current one just seems like a normal size?
Well, smartphones are getting bigger, but I think they're pushing the envelope in terms of how big you can actually get before you have a tablet. There is, you know, if you look at how well the SE did, I think there's a market for both. And I don't know the exact mix. They don't really give it, but the mix between the iPhone 7 Plus and the iPhone 7 is probably pretty balanced, I would say, quarter in and quarter out.
Here's my other question. Shouldn't analysts and investors, David, be better at estimating iPhone sales, be better at reading what Apple does? I mean, every quarter, Apple lowballs its forecast, but we've been dealing with iPhone sales, iPhone unit sales for, 10 years now. You would think that people know how to game this or read this company better.
I don't know. When you're talking about a business of this scale that's so deeply intertwined with global economic activity and is so truly global, I don't think it's that easy to do. So I don't fault the analysts for their poverty there. But I just wanted to say, you know, I love my iPhone 7. I pulled it out of my pocket before. In many ways, I have qualms about certain things it does. But the question I have is how much longer are we going to have to carry around a rectangle of glass that is fundamentally an inconvenient device? It is not the device of the future. So yes, it's a really good implementation of an old device, as I said before. And I think the iPhone 7 was a step forward of considerable quality. And the camera's nice and all that. I like that. But we're not, it's wrong to think the future of computing is squares of glass in our hands.
All right, David Kirkpatrick and John Butler, you guys are going to stick with us because we're going to continue talking Apple. But let's take a quick look at where Apple is trading after hours. And the initial reaction is still positive. You can see the stock up about 2.8%. This is Bloomberg.
We're back now with more insight into Apple's fiscal first quarter. Bloomberg's Caroline Hyde just got off the phone with Apple's CFO, and she joins us now from San Francisco. And we still have with us our guest, Techonomy CEO David Kirkpatrick, to discuss Apple. Caroline, let's start with you. What did you gather from the call? What was Luca Maestri's main message?
The iPhone 7 Plus. That is what he kept on reconfirming. They were amazed that the SKU moved to the iPhone 7 Plus. It really beat all their own internal expectations. This is what drove the beat in terms of revenue, what drove the beat in terms of profitability. Earnings per share actually climbing rather than falling. That was a big surprise. Really, Luca Maestri there saying that the beat seemed to be a shift towards this dual camera. That's what everyone loved in the iPhone 7 Plus. It was their most popular model. Interestingly, you mentioned about the other products and the fact that that fell. That's exactly what Alex Webb, my colleague in Bloomberg News, asked about on the call. And he said, look, we're counting within that number iPods, sales there slowing down, displays slowing down, Apple TV, well, that was a new product launched this time last year, and it was a very tough comparison. So perhaps don't get too worried about the other products' slight slowdown.
Caroline, services is a key focus for the business, and they want to grow this business. What did the CFO say about the future of the services business?
Very bullish. In fact, the key takeaway here was if you take a standalone basis, the services part of Apple, it is as big as a Fortune 100 company now. They say this is crucial. They're going to double the size of it in the next 4 years. So they say, we're talking here Apple Music, Apple Store, which is up 40%, he said, in terms of growth. The cloud, the Apple Care, that too saw growth at a record pace. So clearly they are significantly bullish on the services side. This is something they've tried to big up, 1 billion devices. We know why, because it had actually always been a bit worried about the iPhone slowdown, but services is starting to pick up.
Okay, so then explain the miss on the second quarter forecast. Apple looking for revenue of $51.5 to $53.5 billion when analysts were anticipating 53.8. It does look to be an increase from the same time last year, but it's not where analysts were anticipating.
Yeah, you're right, Scarlett. It's about 4% off where analysts on average were telling Bloomberg they saw it. The reason? FX. A big, significant headwind. That is what Luca Maestri has been telling me on the call. He's saying they feel actually very good about their revenue estimate. They're saying a range of 2 to 6% is pretty good. But check this out. $1.5 billion was what knocked off because of the strength of the dollar. He's saying in some of the countries that they're in, they saw a 25% gain versus the local currency. It was a big headwind. And a last quick message for you. You talked there about China and emerging markets. It's interesting. China not brought up on the call. They said instead significant growth in Brazil and in Turkey. Those sorts of countries were really brought up in terms of strength of growth.
All right, thank you very much. Bloomberg's Caroline Hyde, and we're still with, you're still going to stay with us, and we still have Techonomy CEO David Kirkpatrick. David, what else are you seeing? What's standing out to you?
Well, I do think Caroline is really getting some very interesting insights there, and the services piece is huge. Impressive that it is such a gigantic business, and let's face it, even when you use some of their word processing products, you're actually using their cloud services, there's going to be ways they can charge more money for that stuff going forward. I still worry that it doesn't feel fundamentally new, the way they're handling most of that. And I don't think, frankly, their communication to customers is that clear about how important or how big that opportunity is from a user point of view. Why should we be doing that? On the other hand, you got to give them credit. One of the headlines I was just looking at the break, monster earnings report. People are giving them a lot of credit for how well they turned this company back upward. And I think we do have to give them credit for that. And let's face it, the global economic environment is super tough, as Carolyn also pointed out.
Yet the company feels like it seems like it's very conservative in how it approaches expanding to new businesses, right? Mark Gurman has been reporting on how Apple was looking to some kind of car venture or car project, and they've cut back on that effort. These were supposed to be the innovative, visionary next steps that the company would do in the way that Amazon remade everything with the AI, with the Alexa.
Well, I think they'll still
or the
have...
Echo, excuse me. Alexa's a
well, it's actually both. Yeah, I call it both, too. I think the Apple will still have a major automotive product. It might not build a car per se. It might not be an Apple-branded car, but I bet they start making more and more money through software in vehicles. They've done a pretty good job working with the automakers on that already. So I think that is a big opportunity. They've just shifted to sort of bury it more as a services product.
Caroline, is this a trend across big tech companies in Silicon Valley, kind of thinking about Google cutting back on some of these wild, crazy Project X type things, that if they're not making any money, there's limited patience for how much they're willing to throw at them?
Or maybe the CFOs are gaining more control when it comes to the board level. It does seem that, indeed, you're right, at Alphabet, the CFO, Ruth Porat, really trying to take control of the spending there, and Apple really trying to vindicate where the growth is now coming from. It's interesting. I don't think it's just the tech giants in Silicon Valley. It's the startups. What people want to see, cost discipline now. If you're going to be raising more funds, if you're going to be proving yourself to your investor base, you have to show that you're not always splashing the cash in quite the same way, and the money that you are spending reaps its rewards. And it looks as though at the moment Apple still shows that the R&D is going in the right direction. The money is still being spent on what is still the killer product, the iPhone.
All right, thank you very much. Bloomberg's Caroline Hyde and Techonomy CEO David Kirkpatrick.
Coming up, how potential deregulation from President Trump's administration could change the nature of real estate when it comes to risk. We'll hear from PGIM's real estate managing director next. This is Bloomberg. What you missed before the election of President Trump, the consensus view was the global economy is stuck in a low-rate, low-inflation, low-growth pattern. The narrative changed pretty abruptly after Trump came to power. It set the tone for a panel discussion that I hosted at Prudential Global Investment Management last week. I spoke with Ed Keon, one of the firm's quantitative money managers, Robert Tipp, who oversees fixed income, and Mark Halley of PGIM Real Estate. Now, in this part of the conversation, I asked Halley about President Trump's background in real estate and what the world might look like from that perspective.
We do kind of lean towards, well, if there's going to be some economic policies, there's things he knows and doesn't know, but we know that he does know real estate and that there are likely to be some real estate-friendly policies which might come out of this. The discussion so far within taxes, do we drop taxes from 35% to 15%? Do we change our depreciation to go to accelerated cost recovery system? Do we eliminate the interest deduction? A lot of those things could be a little scary to us in terms of they're pushing out 2 standard deviations, and some of those were in place prior to the S&L crisis. and kind of fueled some of that S&L crisis in terms of accelerated cost recovery system. Let's write off our real estate assets over 1 or 2 years and forget about the returns. It's how much can we deduct. So from that perspective, we get a little scary in terms of the economic policy. We're in a business of, as I said, supply and demand, and almost every real estate recession is that supply-driven side of the equation. It's excess supply, which will push down the real estate. So where we are today is that we look at the U.S., we think there'll be slightly beneficial policies or net neutral to real estate. Taxes coming down are always a good thing. Elimination of the interest deduction, we think, will be an interesting one for real estate because it might change the nature of real estate to make core plus investing, lower leverage, a lot more attractive versus opportunistic investing where you've got 70–80% leverage. If you buyers of that higher leverage stuff are looking for that interest deduction to make their numbers work. So you might have a slight shift down the risk spectrum from that perspective. The accelerated cost recovery system, if that does come into place, that could push more development, and that kind of also, makes us take a step back, but we haven't seen, people gearing up for that yet. So that's a wait and see. Let's see how that goes through in terms of Congress. And then we look around the world and look at the other economic policies. They really haven't shifted too much yet. Everyone's looking at the U.S. to see where we're going, what we're doing. But if we look at our cycles, we're probably 2 years ahead of where Europe is today, and then probably another year ahead of where Asia is in terms of our real estate growth policies or economic policies. So we have time. Again, I'm in the fortunate business where we have no inventions, there's no creations, there's no patents, there's no technology. We don't look and say, wow, they built 1 million square feet across the street yesterday. So we have the luxury of looking out over the long term, of doing our research and watching that supply cycle. So for us, the economic policy is important for driving cap rates and driving cost of capital, but we don't see the growth yet. We don't see the growth out of Europe. It's still nascent in terms of what's happening over there. We don't see economic policy shifting despite what's going on in the elections, the populist side, which keeps gaining favor every day. So we see a relatively muted environment over there and over in Asia. So we're in that slow and steady kind of that tortoise of, we should be okay on the real estate side.
We have some breaking news. Medtronic is set to prepare the sale of its medical supplies business. Medtronic is the biggest medical devices company in the world, and it's working with some advisors, according to our reporting, to sell part or all of this medical supplies business. This is still at a very early stage right now, but we know that Medtronic has sounded out prospective buyers for the division, and this unit could be valued at as much as $5 billion. Medtronic declined to comment to us, but again, according to people familiar with the matter, it is looking or preparing to sell its medical supplies business.
And we want to bring you an update on where Apple is trading in after hours, up 2.5%. Let's just wrap up some of the key data points from the release, why investors are excited. Revenue, $78.4 billion, beating expectations of $77.3 billion. All-time iPhone record revenue, 78.3 million units sold. Average selling price beating expectations. Adjusted EPS of $3.36 coming in ahead of expectations. Strong growth in services. So solid all around. And coming up, what you need to know for tomorrow's trading day. This is Bloomberg.
We're looking ahead. You don't want to miss this. President Trump expected to announce his nominee to the Supreme Court tonight. Bloomberg will have live coverage starting at 8 p.m. Eastern Time. Both finalists have been summoned to Washington.
It'll be exciting. Tomorrow, the UK House of Commons holding a vote on a draft law giving Prime Minister Theresa May the authority to trigger Brexit.
And don't miss this. Bloomberg will have special coverage of the Fed's first monetary policy decision of the year. That begins at 2 p.m. or that takes place at 2 p.m. Eastern Time in New York. The meeting began today.
And finally, Facebook earnings reported out after the bell tomorrow. Should be very exciting.
That does it for What You Missed. Thanks for watching.
Have a great evening. This is Bloomberg.